In this topic, we talk now about tax on business or professional income. So generally, there are two main income streams here in the Philippines. Generally, that can either be an income on employment or an income from business or based on your practice for profession. So in your tax on business or professional income, take note what we tax here is your income. What we tax here is the income arising from business or profession. So the subject matter here is the income, not the business or the profession. Because if the subject matter is the business or profession, the tax here is business tax. But since the subject matter here is the income from the business or profession, the tax is income tax. So always remember, there is a different subject matter. So the subject matter here is the income, so income tax. If ever the subject matter is the performance of the business, then it is business tax. That is a separate topic. Our topic for today only focuses about your income tax on your business or professional income. So the topics that we will discuss, first, we define what is business or professional income. After that, we look into the taxation of business or professional income. And then we file now your business or professional income tax return. Let's start and define now your business or professional income. So if you still remember, taxable income are the pertinent items of your gross income less your deductions. As I keep on telling you, the normal formula in computing your taxable income is your gross income less your deductions. This will give you your taxable income. Now, your deductions differ if ever your tax scheme is final tax or regular income tax. In final tax, there is no deduction. In regular income tax, there is a deduction. Now, let's look into whether the tax scheme in a business or professional income is final or regular income tax or both. So here are the following items of taxable income. First are your gains. These are your gains on the sale of property, whether it is personal or a real property. So these are gains or arising from the sale of property, whether it is personal or a real property. But under the tax code, we classify your property as either ordinary asset or a capital asset, ordinary asset or a capital asset. Next item of your taxable income, next main item is your business or professional income. This is an income coming from your practice of business or practice of profession. And then passive income, these are income in which you earn an amount without exerting much effort. So no active or direct involvement, however, you earn an income. Next, compensation income. This is an income coming from your employment. So income from your employment, compensation income. Remember, passive income, this is income without doing any effort or any active participation. So unlike in the three, the gains, business, or compensation income, generally there is an active participation in gains. Of course, you need to sell so that you have a gain. In business or professional income, you need to create your business or you need to practice your profession. In compensation income, you need to be employed. However, in passive income, there is no effort, but you are earning. Such that, for example, you just place your money in the bank and then it earns money. So there is an income, however, no active effort coming from the taxpayer. In this particular topic, we will only focus ourselves on number two, the business or professional income. So business or professional income. Business or professional income is income derived by self-employed from trade or business. Self-employed from trade or business, or income derived by professionals from the practice of profession. Take note, take note, as I told you, individuals generally have two main income stream. What are those two main income stream? That is your business or profession, business and employment. While for corporation, generally their stream comes from business income only. Okay? Why? Because you cannot employ a corporation. You cannot employ a corporation. And take note, when we talk business, it is the self-employed. When we talk about professional income, it is the professionals from practice of their profession. By the way, here in your business or professional income, whenever the individual is both employed and it earns from the business, we call that individual as mixed income earner. Okay? Again, the individual can either earn only from business or only from employment. But what if the individual earns from business, both from business and from employment? So the individual is employed, and aside from being employed, the individual runs a business. We call that individual as mixed income earner. But since we are only talking about your business or professional income, uh, the taxation purely focuses on business, focuses on your business. Please remove this in your mind that some thinks that if ever you have several series of income, so let's say you have you are employed with Jollibee, and then you are still employed with KLC, and then employed again in McDo. So you're employed into three institutions or organizations. Are you considered a mixed income earner? No. When we say mixed income earner, what you look into is the uh, where do you derive that income? Where do you derive that income? So based on the classification of income we just enumerated a while back, whether that's gain, business, employment, or purely passive income. So when you have all of those or a combination of those, you are considered mixed income earner. But if you are purely employment, meaning just like our example, on our example, we have employment in McDo, in KFC, and employment in Jollibee. So although you are employed into three institutions, but since your main income comes only from one, which is employment, you are not considered a mixed income earner. When are you considered mixed income earner again? If you derive income from several sources of income streams. So combination of gains, combination of business, combination of employment, combination of passive income. Okay? Not because there are combinations of business. So for example, you have three businesses. Are you considered a mixed income earner? No, you are still in business only. You have three employment. Are you considered a mixed income earner? No, you are still in employment. What I'm pointing is if there are several streams coming from the different types of income, then you are a mixed income earner. Please take note of that, okay? Don't label it as mixed income earner if there are three employments. It's still tax under employment. If it's purely business, three businesses is still tax under business. If there are several income, we call that mixed income earner. That's a different taxation again. Okay? So our focus for today, only in business. Only in business, not mixed income earner. Even if the individual have 10 businesses, it's still that is a tax on business. And still that is the tax on business. So how do we compute your gross income from trade or profession? Remember, in the computation of your taxable income, we have your gross income less your deductions, we have your net income. So how do we compute your gross income? Your gross income is computed this way. It is equal to your sales less sales return less sales discount and allowance you have your net sales. Therefore, your gross income in your trade or profession is known as your net sales. It's known as your net sales. Okay, your gross income under your trade or profession is known as your net sales. And how to compute for your net sales? Sales, less sales return, less sales discount, and allowance. Now, how do we tax the gross income? So the gross income, if ever that is less than or equal to 3 million, you can tax it either at regular income tax or 8% flat rate on gross income. Therefore, you test your gross income, you test your gross income if ever it is less than or equal to 3 million. If it's less than or equal to 3 million, you have the option either at 8% flat rate or regular income tax. If the gross income is less than equal to 3 million, you have the option at 8% flat rate or regular income tax. But if the gross income is greater than 3 million pesos, it is purely regular income tax. It is purely regular income tax. So the question is, when do you have the option for 8%? When do you have the option for 8%? You have the option for 8% if ever you are not a VAT registered taxpayer. Next, if you are not subject to other percentage taxes. Next, if you are not a partner in a GPP. Next, you must signify 8% rate. Okay? You must signify 8% rate on your first quarter tax return. You must signify on your uh, tax return the 8% rate in your first quarter tax return. Sir, what tax return? Percentage tax and income tax that you are using the 8% flat rate. Again, so a while back we said to compute for your taxation or your taxable income, that is your gross income less your deductions, this will give you your taxable income. Now, we talk about your gross income. What is your gross income? That is equal to your sales, less sales return, less sales discount and allowances. We get your net sales. Therefore, your gross income is equal to your net sales. Now, you test that gross income. Your gross income is tested whether it is less than or equal to 3 million or more than 3 million. If less than or equal to 3 million, you have the option of 8% flat rate or regular income tax. When can we have your 8% flat rate? So you have your 8% flat rate when you are not VAT registered, if you do not pay any other percentage tax, if you are not a partner in a GPP, and you signify the 8% flat rate on your first quarter tax return. What are those tax return? Percentage tax and your income tax. However, you can also update your COR. Sir, what is COR? That is your Certificate of Registration. This is known as BIR Form 2303. You can update your COR if ever you are less than or equal to 3 million, that you are using only the flat rate. Sir, what's the difference of that? What is the difference of flat rate and RRT? If it is flat rate, only income tax, no more business tax. If you are using RIT, you have both income tax based on regular income tax, and you are still liable to pay business tax. Therefore, this 8% flat rate is like in lieu of income and business tax. It gives you savings. It gives you savings. The 8% flat rate is in lieu of income and business tax. Again, what is the effect of flat rate and RIT? In flat rate, you have only income tax, that is the 8%, and you will not be liable to pay any business taxes. If you are using the RIT, then you are still liable both to income tax and business tax. So it's better to use the flat rate if ever you have a gross income less than 3 million. But you must always signify the 8% rate on your first quarter tax return. Sir, what if I was not able to signify on my first quarter tax return the 8% flat rate? If you are not able to signify the 8% flat rate on your first tax return, then you are liable to RIT. Sir, even if my gross income is 3 million, yes, because these are the requirements. These are the requirements. First, you are not VAT registered. You don't pay any other percentage tax based on the rates on your percentage taxes. You are not a partner in a GPP, and you should signify the 8% rate. How do you signify? There are two ways. Place on your first quarter return that you will use 8% rate, and or you update your certificate of registration. That is your BIR form 2303. Okay? So therefore, we are now clear that in your business or professional income, you can be taxed either at flat, which is like a final tax, 8%, and you can be taxed at RIT, which is, of course, from 0 to the rates up to 35%. 0 up to 35%. Now, how do we compute your taxable income? If ever you are using 8% flat rate, you just get your net sales. This is your gross income. You add your other income, you total it, you deduct 250,000. This is a fixed deduction. Sir, where did you get the 250,000 as a fixed deduction? This is because on our tax table, income from 0 to 250 is exempt. 0 to 250,000 is exempt. Therefore, if ever, you need to still deduct the 250,000 here in your flat rate. And whatever is left is your taxable income. If that is regular income tax, then you get your net sales, you add your other income, you total it, and then you have your deductions, then you have your taxable income. Then you have your taxable income. So here, take note, although it is flat rate, there is a deduction. Sir, why is there a deduction again? It's because under our tax table, income from 0 to 250 is considered exempt. 0 to 250 is considered exempt. Therefore, you just need to just remove that 250,000 because it's still considered as exempt. Okay? Why? Because as a general rule, your business or professional income should be subject to RIT. But under the train law, you are just given a flexible way or a better way to pay, which is 8%. So you still make use of the concept in your RIT that the 0 to 250 is exempt. Hence, you remove that, but we multiply it to flat rate. So once you get the taxable income, you just multiply that to 8%, then that is now your tax due. That is now your tax due. So let's have an example. Um, so let's just do quarter one. Let's just do quarter one. So let's compute the taxable income. Let's compute the taxable income using the 8%, assuming elected, and then we use RIT. So 8% and then RIT. First, we get your net sales. So how do you get your net sales? That is your sales, less sales return, less sales discount and allowance. So this will give us 880,000. Then you remove your deductions. Under 8%, we deduct, of course, only the 250,000. This is the fixed amount of deduction. This is fixed. In your RIT, what we will deduct is the total expenses. So this is 450,000. And then we can now get your taxable income. So 880 less 250, this will give us 630,000. 880,000 less 450,000, this will give us
For 30.
430,000. Under your 630,000 taxable income, you just multiply it to your flat rate of 8%. So 630,000 times 8%, your tax due is 50,400. If you are using your regular income tax, if you are using your regular income tax, you look into the tax table. This is above 400 up to 800. Above 400 up to 800. So we remove the base 400,000. So we have here excess of 30,000. You multiply it to 25%. So 30,000 times 25%, you will get 7,500. You add your basic tax of 30,000, your tax due is 37,500. Your tax due is 37,500. Okay? So it depends on whether you make use your 8% or your RIT. But again, 8% is better because you will only pay one tax. If RIT, aside from paying 37,500, you will also pay a business tax, which is sometimes equivalent to 3% or 12%, depending if ever the business is subject to VAT or it is subject to uh, percentage tax, depending whether it is subject to VAT or subject to percentage tax. Now, how do we file? How do we file? You file your quarterly income tax return using your BIR Form 1701Q. Deadline is every quarter. So for first quarter, May 15, second quarter, August 15, third quarter is November 15. And then you will have your annual income tax return, which is your 1701A. This is filed on April 15 of each year. April 15 on each year. Okay. Sir, what if I am a mixed income earner? What if I am a mixed income earner? So let's say, for example, income from compensation. So taxable income from compensation, 450,000. Taxable income from business, 800,000. Where will I deduct the 250,000? In a taxable income from compensation, as a rule, that is always regular income tax. In your business, it can be 8% or regular income tax. If both regular income tax, no problem, right? No problem. You just need to add them and you subject it to your regular income tax. But what if the business is 8%? What if the business is taxable at 8%? How do you do it? Okay. The 250,000 deduction will be deducted to the compensation. There will be no deduction from your business income. There is no deduction from your business income. So how do we tax it? So the 450,000, you remove the 250,000, eventually you have 200,000. You subject that to RIT. If that is 400,000, 450,000 income, that is again above 450, above 450, and below above 450 above 450, above 400 but below 800, right? Above 400 but below 800. So still you tax that rate, based on the rate in excess of the 250,000. So let's 250,000. So this is 200,000. So tax due in excess of the amount. This will give us 450, 450, 25% of 50,000 plus 30,000. This will give us, and then the business will be 800,000 times 8%, 64,000. But what if it is purely regular income tax? So the total taxable income now is 1.25 million. 1.25 million. So you look 1.25 million in your tax table, that is 800,000 to 2 point, 800,000 to 2 million. 800,000 to 2 billion. That is 30%. 30%. So 1.25 million, 1.25 million less 800,000. This will give us 425, no, 1.25 million less 800,000. This will give us 450,000 multiplied by 30%. This is 135,000 plus the basic tax on 800,000, that is 130K. Your total tax is 265,000. The total tax is 265,000. Compared if ever you use 8% and RIT, it is only 64 and 42.5. But if you use regular income tax for both, then the total is 265,000. Okay, let's wrap up what we learned here in your um, business or professional income. So, in your business or professional income, you have the choice on either 8% gross income tax or regular income tax. So, when do you have 8% gross income tax? If you have gross income of less than or equal to 3 million. If your gross income is more than 3 million, you will use regular income tax. And the computation, to compute here, we have here your net sales less the deduction of 250,000. That is your taxable income. You multiply it to 8%. This is your tax due. For regular income tax, you have your net sales. You remove your deductions. And then we have here your taxable income. The deductions here are your different expenses multiplied by your tax table. That is your tax due. So just remember, if ever you need to elect the 8% on your first quarter tax returns, and you must not be VAT registered, or you must not be a general professional partnership. Okay, that's it for this topic.